answer those queries, I have with me Tapan Doshi, analyst and chartered accountant. Welcome, Tapan. I want to know
Thank
first
you.
about Adcounty Media. My colleague Pulkit was flagging off risk of cash flows. Cash burn is happening in this company. What will you advise?
Well, thank you very much. See, Ad County, if you see the profitability is quite good. Of course, it's in a digital marketing area, so there a lot of competition is there. But the best thing is it's a asset light model, highly scalable, low capex required, and at the end of the day, if everything goes fine, the cash generation happens. But yes, there are some of the negative points which you have to understand here. The top 10 clients contribute almost 76% of the revenue. 86% of the revenue is coming from three states, Haryana, Karnataka, and Maharashtra. Advertisement budget, as you know, if any type of economic slowdown is there, then there may be a cut on the advertisement budget also from the company side. Some legal issues are there, some tax and civil litigation is there, almost 7.9 crores. So all these are negative factors. But the good thing which I found out in this no SME IPO is compared to other SME IPO that no, because of this asset light model, no, the revenue generation, cash flow generation normally comes no a good way over the time. Okay, and again, their blue chip clients are like Zepto, ShareChat, Paisa Bazaar. They are all like no blue chip companies, and the valuation is almost 10 times. I mean, P ratio is around 10 compared to their peers, which is around 20 to almost 30, more than 20 to 30 P. If you see now the way the stock is placed and no the way the valuation is, I think still the listing gains will be there. So my take is that if you are an investor, if you want to apply now, you have to take all the risks which I have spoken about and also Pulkit has spoken about. Be a little bit cautious, but yes, if you're talking about listing gains, there may be a listing gains here, but be cautious on that part.
All right, so at County Media, cautious approach. Hi Tapan, Kavita this side, and the next IPO on our radar is Neetu Yoshi. So some concerns which were highlighted earlier also by Pulkit, single location manufacturing concentration, top 5 customers accounted for more than 62% of their revenues, and also the revenues are sensitive to iron demand cycles. Now looking at these factors, what are the other red flags that you want to highlight, and do you also recommend a cautious approach on this with a bit of listing gains if one wants to take that risk?
Yeah, thanks. So if you see talk about Neetu Yoshi, of course it's an no segment of railway. No, the way capex is increasing, there will be a good order flow over the time. Again, no, they are approved vendor of RDSO certified. Okay, now this is a very niche area, and there is a good moat about this. Okay, and if you see their margins also, it's almost 36%. Net margin is around 26%. So which is good overall. Some before going to valuation, let me talk about some of the negative points. Like they are totally dependent on railways. So if something no order book slow down from railway side, then there will be a problem with for this company. Again, at the end of the day, they have only one plant in Uttarakhand. So that is also one type of risk. Debt is almost 13.6 crores. So interest is on a higher side. Some of the operating cash flow is little bit negative, and also personal guarantees on loan is there, and some of the tax litigation cases also going on. But when I see the valuation part and see the overall prospect, no, I think that because it is in railway segment, there will be a good order book over the time. Okay, and valuation is comparatively much lesser than the peers. Okay, and if you see there's a lot of gap between the peers, and their EBITDA margin, all thing is good. And plus, as I told you, it's a RDSO certified. So on that part, I feel there will be a listing gains here also. But as I told you, okay, risk is there, and SME IPO, there is always a risk. So one has to be very careful in investing. But yes, I feel listing gains is there. So if you want to apply, check out the risk and have a cautious look here.
So cautious approach is what is suggested by Tapan, and viewers, you should take your own risk if at all you are wishing to invest in this IPO. But for now, the avoid is the rating which is coming in from Tapan. Thank you so much, Tapan, for joining and advising our viewers. And at